Make thousands of dollars per month with swing trading, an easy strategy for beginners. Before we start, you might ask yourself, what is actually swing trading and why is it better than day trading? I would like to share with you my personal story and my trading journey throughout my trading career. I started around 11 years ago, and back then I was located in Germany and I had a full-time job, so all I can trade was when I come back from work and trading in the evening. Unfortunately, I started with day trading, and that required a lot of my time, a lot of my energy, and actually the number one reason why I started trading in the first place was to be financially independent and have more free time. Well, guess what? The opposite happened. I actually ended up sitting in front of the charts more pretty much the whole evening, and so I ended up always with losses. I know it sucks and I know it's pretty normal at the beginning, but I did that for a while and that actually never improved in the first 1 or 2 years. So all I did was coming back from work, trading the US markets because of the time difference. That was the best market to choose, and then doing pretty well throughout the week and giving back all of my hard-earned profits on a Friday. One day something happened to me, a wake-up call. I checked the Apple stock and it had a pretty decent move throughout the week, but yet I was day trading it and I ended up break even. And so for me, this was a wake-up call to stop day trading and scalping and fixating on lower time frames and start looking at the bigger picture and hold these positions for a little longer. This is how I started looking into swing trading. It means that you're holding your positions for a little longer. You're not closing your positions each day. So I normally hold my position somewhere between a few days, a few weeks, and if the market is in a really good cycle, I might even hold for a few months. So that has really a game changer for me, and this is how I transitioned from a losing day trader to actually a profitable swing trader over the years. So if you're trying to capture a big swing out of a trend, or if you're just starting right now and wanting to grow your account a little quicker and trying to generate some extra profits, this is by far the best strategy to start with. So what is the strategy and how I'm exactly trading? First of all, I really like trading the Nasdaq or tech sector. This gives me plenty of volatility and a lot of growth stocks. I like focusing on growth stocks, something like Nvidia, PLTR, all stocks that are hot, that have a lot of momentum and a lot of movement and big range. This is how I can capture pretty decent moves in the shorter periods of time because they're volatile and they can move pretty quickly. Now, if you are someone who does not enjoy looking into individual stocks or doesn't enjoy the work of doing the research, you can also choose to focus on ETFs, especially leveraged ETFs. This is a great way for those that are just starting and don't want to do the extra work. What I like though, and I enjoy the process, is doing a little bit more research with these individual stocks. When I define the market cycle, if you're in an uptrend, downtrend, accumulation or distribution, the next thing I do is looking through the strongest sectors. Most of the time, and especially in the last few years, this has been the tech sector. So I'm checking what are high performing stocks and I'm looking especially at the fundamentals. I'm looking at earnings per share growth over the last quarter, earnings per share growth over the last years and 3 years. This gives me plenty of information that the company is doing good, the stock is doing good, and so I know they're not faking their numbers for a quarter or got lucky with 1 quarter more sales, for example. I also look at increasing sales, how many funds are buying the stock, are more funds actually interested in buying the stock, and how is the stock acting relatively to the market. So these are pretty important things for me because I know if everything aligns with my KPIs and what I want to see, this is a winner and this stock can go thousands of percentages to the upside. This is the positive part when you decide to trade individual stocks, especially growth stocks, that you can catch one of these big moves if you know what to research for. The downside, of course, is that you have to pay attention to each stock and you have to make sure that you're really up to date with your analysis, to check your stock stocks every day, compared to if you trade the TQQ or SPXL, that are the leveraged indexes for the SPY and the NASDAQ. You are pretty much easy to go and you buy the dip. You don't even have to look at the chart too many times. It's really easy like that, because the market always goes up over the time. This is your edge, and bad stocks in these sectors and indices are going to be replaced with good stocks, so you're always on the safe side. But if you want to capture some bigger moves, something like Nvidia, for example, this was one of the stocks that I traded very early back then, where no one was even paying attention to that stock. And so if you want to capture these type of stocks, you want to do the extra work. Now, I don't want to overwhelm you with KPIs, since this video is just for beginners, but I want to share with you how simple it is to trade based on the daily chart, and that you really don't need a lot of time to do that. Unfortunately, most people overcomplicate things. They want to put too much indicators. They think that all kinds of news and analysis going to help them to pick the next winner. Honestly, you can just trade the Magnificent 7 and you will be still good to go. So I want to share with you what exactly I'm looking at, what technical analysis I'm using, and how that looks on the chart. Okay, so now we're going to take a look at the stock ANET, because I want to show you an example of what exactly I'm looking at. ANET is Arista Networks company. This is a pretty good growth company, has a very good volatility, and is perfect if you're trying to capture some decent moves per swing. Before I start planning any entries or exits, I like to do a top-down approach, meaning I start with the big picture and I'm trying to figure out, are we in an uptrend, are we in a downtrend, or in a sideways price action, which could be accumulation or distribution on the S&P 500 and on the NASDAQ. Now, in order for me to be interested in stocks, I want to be in the right cycle. It does not make any sense to buy stocks if the market is downtrending or if there is fear on the market. Understanding the sentiment and the psychology of the market is more important than trying to put all kinds of indicators on the chart and predict the future. First of all, remember that we always had a move in the trend direction and correction, move in the trend direction and correction. And here, as you can see, another move in the trend direction and a correction. What I'm looking at is a few days in a row correction. This could be 3 to 5 red days in a row pullback. This gives me a little better entry. I always want to enter as low as I can around support. I don't like trading breakouts, and I don't personally think this is a good strategy, because if you're trading breakouts, you're just putting yourself into a bad risk-reward situation, and as soon as the market reverses, you're going to be in a drawdown. So if I see a few red candlesticks that are stopping around support, like in this example, this was the low of the chart, and the stock consolidated for a little bit, broke this consolidation and pulled back into that low. It even broke a little lower. And so the first thing that I want to see here is one green candlestick. This was the first somewhat of a doji candlestick with wick on the bottom, and first green candlestick that happened. This is for me my entry. As soon as the next day the price goes above the high of that candlestick, this is my entry, and underneath that doji candlestick is my stop loss. This is around $12 risk per share. So what we're aiming is to do more than that. Of course, we want to make at least 1 to 2 risk to reward. So if you're risking $1,000, you want to make at least $2,000 on that stock. And so for that, we're looking at where is the previous resistance on the chart, or in other words, where is the previous high. The reason why we're looking at these zones is that because these are potential reversal zones, and a lot of times the stock is going to stop around that area, take a breather, consolidate, or pull back. And this is the time where you want to exit that stock if you're trying to take just the swing, and then move on into another stock or another setup. After we entered here, as we can see, the stock went actually 3 times higher. So we had here in this case 3, even 4 times risk versus reward. This is a pretty good ratio. And so if you entered here, you could have put your take profit order right here at the top at the resistance. And just in a few days, you would have made, if you risk $1,000, maybe around $3,000 to $4,000 on that stock. So that's the whole idea of swing trading, focusing on growth stocks that have enough volatility to move, and trying to find the best possible entries around support so that you have pretty good risk versus reward. And by the time you enter the stock, you're pretty much in profit, and just in a few days you can make a couple of $1,000. So that's the whole idea. I hope this video helped you a little bit to understand swing trading, the growth stocks that I'm looking at, and the entries and exits. If you're interested in our growth stocks, feel free to subscribe to our growth stocks list. I'm going to put the link in the description. I'm looking forward to see you back on this channel again. Bye.